Economists are expecting rates to remain on hold when the RBA concludes its meeting today. The cash rate has been sitting at 4.35% since last November. Experts and the major banks are not anticipating a rate cut until early next year. After today, the Reserve Bank has one more meeting scheduled for December before breaking in January. And joining me for more is Chief Investment Officer at the Motley Fool, Scott Phillips. Scott, it's good to see you. Look, we know the RBA and Treasury have been trying to understand what a Trump versus Harris presidency would mean for the world and Australia's economy. And now they have to hand down this decision today before finding out who it will be.
That's right, Kenny. Good morning. It's going to be a very tough 24, 48 hours. Economically, politically, all those things all wrapped up. It's pretty likely that, at least in the near term, neither candidate winning office will meaningfully impact the Australian economy. Kamala Harris talked about price caps and other things. Donald Trump has talked very loudly about tariffs. We don't yet know whether or to what extent Australian companies will be caught up in that directly, that is importing to the US, or indirectly. For example, we know very well a lot of Australian iron ore ends up in China. Should the US take put a target on China and add tariffs to their exports to the US, that may well catch us up in a secondary impact. So there's plenty still to be decided. And you're right, the RBA trying to work that out at the same time as the US economy is reasonably strong and they've got reasonably low inflation. So we're looking here at home, and I dare say that while they will probably not comment, at least overtly, on the election, the domestic issues are still the key ones, right? Around the world, every other major central bank but the RBA has started cutting. The reason? Almost every major economy bar Australia has had an inflation rate that is meaningfully lower than ours. And so that's kind of where the RBA finds itself, trying to roll in the global issues with those very significant domestic ones that do seem relatively unique for Australia at the moment.
If we do see a rate cut in February, which is the general consensus at the moment, but then we see the government splash the cash in cost of living election promises during the campaign, what's the fear then?
Yeah, that's right. Not only the government, by the way, but the opposition as well. The RBA is going to have to try and work out what it means for the economy if there is stimulus. And we've got to say, the government over the weekend taking $16 billion, or announcing $16 billion off HECS debts. Reports in the Fin this morning that they may go further and reduce more uni fees. Whether it becomes a big spending election, as we saw in Queensland, or whether they do keep the purse strings tight. Jim Chalmers, the Treasurer, has come out and said they won't go to the election with big spending. That being said, a couple of days later, we got the HECS decision or the HECS announcement, and potentially, if the reports are true, more cuts. So you're right. This is the big challenge. The question we don't yet know the answer to is the election is up to 6 months away, as you know, and inflation may well come down meaningfully between then and now. So as always with inflation, it's not just the impact of the dollar value of any announcements, but when they take effect and what else is happening in the economy, particularly on the demand side between now and then.
It's going to be a long election campaign. So what potential changes in language will you be looking out for that could change the predicted February timeline of a rate cut? Do you think there's any chance of that happening?
I mean, we talk about the fact that this is a no chance rate cut today. I think that's probably most likely, but don't rule it out. I keep saying to people, the RBA have been very clear about what they were going to do 6 weeks ago, what they said they would do, how they said they'd look at the economy. The Reserve Bank of New Zealand in May this year said, nope, not cutting rates, not until 2025, put everything away, we're not going to look at it. In August, 3 short months later, they started cutting rates. So circumstances change, and we should, by the way, give the RBA some room for that. It doesn't seem likely that, based on the data we've seen, it's going to be a November cut. December, as you've already said, is another meeting. What's that, 5 weeks away, maybe 4 and a bit. The reality of that one is that, again, not much will have changed. Another inflation read, another unemployment number, maybe some economic growth data. Those things may well tempt the RBA to go early, but that's why we're talking about February. There's no meeting in January, of course. So we're looking at it going, well, based on the current trends for inflation, the current trends for unemployment, retail sales, economic growth, it doesn't seem like we're going to be able to cut rates until at least February. I think almost every one of the big 4 banks is saying a February cut is likely, and then somewhere between 0.75% and 1.25% over the following 16 or so months. Some of the banks saying 0.75% next year. One of the big banks at least saying 1.25 by June of 2026, but nobody is expecting a rate cut in this calendar year.
Always good to chat with you, Scott. Thank you.